Hi everyone. Welcome to pipsedge.com. Today we will understand what is leverage in Forex trading. Before getting into details, please read the disclaimer. I am not a financial advisor and anything mentioned on this channel is not financial advice. What is leverage? Leverage has been defined as borrowing an amount of money needed to invest or to increase potential returns. It is using something smaller to control something bigger. It is also known as leverage trading, which allows a trader to open positions larger than his capital. When it comes to Forex, the money is borrowed from a broker. What is leveraged finance? It is similar to leveraged finance, which is the funding of a company or business unit with more debt than normal for that company or industry. How does leverage work in Forex? Leverage is important in the Forex market because it allows for the increase in profits for small price movements when used. It gives individuals the capacity to control large trade sizes with small capital. What is the best leverage for Forex trading? It has been said that the best is from 1 to 100 to 1 to 200 in Forex. It means if you have $400 in your account as a trader, you can control $40,000 with a 1 to 100 and you can control $80,000 with a 1 to 200. How do you calculate leverage in Forex? Knowing that Forex trading offers high leverage for an initial margin requirement, meaning a trader can control a substantial amount of money. Margin-based leverage is therefore calculated by dividing the total transaction value by the amount of margin you are obligated to put up. If a trader is required to put up a 2% of the total transaction amount as a margin and the trader's intention is to trade one standard lot of US dollar to euro, which is equivalent to $200,000, the margin would be $2,000. Example of maximum leverage. If a trader has an account with $10,000 and decides to use a 50 to 1 leverage, means he can trade with $500,000. It is equal to 5 standard lots in Forex. Therefore, each 1 pip movement would cost $50. So, if the trade goes in the investor's favor by 50 pips, he would make $2,500. How to calculate leverage in Forex? There is a way by which a trader can calculate leverage. It is by way of a Forex leverage calculator. It is calculated by 1/margin equals 100, margin percentage. For example, if the margin is 0.02, then the margin percentage is 2%, and leverage equals 0.02 equals 100 halves equals 50. How do you change your leverage in Forex? As long as there are no open orders on your trading account, you can change your leverage, but if there are open orders, you can't. Conclusion. It is good to keep in mind that the amount of leverage employed by any trader, although it is dependent on the trader's risk appetite, you should make sure the position you take is to your advantage and towards the minimum leverage you can be to ensure the safety of your capital. That's about it for today. See you tomorrow. Until then, have a great week ahead and happy trading.